Hello, guys. I hope you're good. I hope you're fine. We are just back with another video. We'd like to talk about the point of interest. So, the point of interest or the point of value. So, as you can see my chart, uh, I'm just using 200 moving average, the trend line, and then marking the point of values. The point of values are whereby that the market usually make lower lows. That is the first thing that you're supposed to know about the market. Is the market making high lows? So once you identify that the market is making high lows, then you can be able to know now the direction of the market. After you know the direction of the market, remember there is a support and resistance. But so many people usually don't trade support and resistance the way it is supposed to be traded, because when you trade support and resistance by itself, it's either there is a manipulation, or if there is no manipulation, there is no another conference that can be able to push the market either down or up. So one of the things is that this point of interest is like a support and resistance, but again you have to use it with something else. So again, there is a trend line, the point of the trend line. So once you identify the trend line, the point of interest along the trend line, we consider the touches. Once the market touches the trend line and the trend, and they don't use it the trend line with its own. So you must use trend line with another thing so that you can be able to make more confluence, and so that you can be able to have a high probability trade. So let's go. So you can be able to see we are going, this is jump 10 index, we are going lower low, we are going lower high, touching the trend line, and then we are going lower low. Here the trend line has broken here down. After now we have broken the trend line here, we have broken this support. Now it becomes resistance. So the thing that I'm going to look at is that one thing is that within 200 days, the market has calculated for me. And then it means that I can be able to sell. The buyers is to sell. So once, if it is to sell, then it means that, that I need to come and look for the ways that I can come and look for the confluence. So this is support and resistance, and you can be able to see there how the market has been touching one, touching at least two, and even here the third one. So once we touch that third one, then it means that we are going to have a conference of support becoming resistance plus the trend line. That's the point of interest. And then this point of interest, that is when we'll be looking to short the market. So this is going to be an entry. And how do you enter? You can enter through the sell limit. You see, you just put an order here, a sell limit there. And then after you put a sell limit order, then it means that now you can be able to do what? You can be able to enter an automatic trade without making instant execution, and you can be able to get a good risk to reward ratio. That is one thing. Now you can be able to see again that now the market has dropped down. You see, it has broken the structure again. You see? So this was the lowest and it has been broken. So once we break the structure again, then uh, it means that now after breaking the structure, at the support and resistance, look, there is a drop-based drop. This drop-based drop has been characterized by bearish engulfing. So this bearish engulfing, so we have two conferences here. One conference is that this bearish engulfing here, uh, act like a supply area. And then there is now the support becoming resistance. So in this area, there must be a reaction that is going to take place. And here, that is when you're going to enter this trade going down, you see, here. And the way of entries, how do you enter a trade? When the market touches this area, you can sell. That is an aggressive trading. Or you can put a pending order. Or you can wait for a conference. A conference or a confirmation is whereby you can be able to look any kind of bearish engulfing here or any kind of inverted shooting star there. You can be able to sell it after it has been formed. That's an entry. So that's an entry. So uh, that is now how you can be able to trade the market. Support and resistance, you combine it with supply, you combine it with a point of interest called the trend line. Once you combine it that way, it means that you have a high probability trade. Then again, once the market is going towards the support and resistance, look at the way that is the candles are forming. You see? So you can be able to see, like in this place, you see the market is forming a whip of candles, no strong candles. They are staying for a very long time to go toward the supply. It means that the buyers have no strength. And the institution, they are gaining the liquidity. So once we reach at that area, we are expecting a boom of a sell. A boom of a sell or a buy in case of a buy. So that is now what we shall be looking at. Look at the characteristics of the candles going towards the support and resistance. Look even the time taken, because if it took for a very long time with those kind of a hip, it means that it's going to be a very long trade of a sell. So that's all for today. Those are the points of interest. If you want more, you can come to the Pips Forex Training University. Then we can be able to engage you on how this market really works, and we can be able to give you more insights on how you can be able to trade professionally and be a consistent, profitable trader. Have a very wonderful time, guys. Thank you for your time. See you next time. Pips Forex. Thanks.